screen, Jonathan. But for those of you who don't know, my name is Nancy Spooner. I am founder and CEO of Tempo. We are an event staffing agency supplying freelance event production contractors, the world's finest, by the way, to production agencies nationwide. And I'm hosting this think tank today because being an independent contractor doesn't mean you can just run all around on your social security number anymore. We need to start really acting like the independent businesses that we want to be. Because if you don't do that, you've noticed you had to get on payroll for a lot of companies, which isn't what we like to do as freelancers, right? So if you want to stay truly independent and you want to make yourself valuable to Tempo, then follow along with Jonathan's advice, ask him questions, and then join us again next week when Hadley will host us and tell us how to make sure that we're covered in terms of liability and insurance. So welcome to the think tank. If you're not on the Tempo team, you probably are because you got that email from me talking about this think tank, but that's our database. We have a Slack channel. That's where I usually go first with our job postings when agencies come to me and say, I need help. If you're not on the Slack channel, let me know. We'll get you hooked up with that too. But without further ado, I want to introduce you to my new friend, Jonathan, who owns, I didn't bring your bio in front of me, Jonathan. Jonathan Wells. You know what, Jonathan, you do your own introduction. Thanks for coming.
Sure. I can do that. And I don't, I'm by no means like a Zoom expert. You'll notice I'm in the meeting twice. I've got my camera on one and then my computer on the other. And the computer screen is the one that I did share the screen. I don't know if you can see that or how it works from your guys' side. I normally do Zooms one-on-one, so the share screen is pretty easy. But if you can find that window and then just kind of listen to my voice and just kind of follow along. But little my story, right? Everyone's kind of got their story. I'm by no means the typical tax accountant. I was I go to seminars and things, and I sometimes go, where's my bow tie and my suspenders and my pocket protector, right? Like all of the fun stuff. And my dad is a tax accountant. That's kind of why I am one. But he used to tell me, goes, son, I had you play football. And I was like, oh, I guess, all right. I didn't know that tax accountants didn't play football. I was like, I guess they do now. But I started doing tax work when I was like 9. My dad was a accountant, and he said, son, you got to learn the tax code young because it's gonna change your life, right? And so I started working with him. And prior to, I remember my very first tax return, it came out of a dot matrix printer. And we went to this thing called the Xerox machine, and we photocopied the numbers from the dot matrix onto this plastic thing with lines on it to get our numbers to go on a line, right? It was pre-laser printer. I'm only 46, but it just seems like how we've come so far, since that point. Now, I did buy my dad out about 9 years ago from the firm here. By the way, I'm located in lovely Minnesota, where it is probably warmer than Southern California right now. Love to say that. But yeah, I'm in a city called Edina up here in Minneapolis. If anybody knows the Twin City area, kind of a lovely, it's a lovely job for seasonal work. I don't know if someone and so what we'll do is, from a question standpoint, this little kind of beginning process, we'll chat for 15 minutes. It's not long, right? But then there's going to be some Q&A. That's where the magic comes in, is everyone's got a little bit of a different scenario, and we'll talk about it. But digressing, tax accountant, long time, born and raised here in Minnesota, went to college here in Minnesota, double major accounting and economics. Taxation is like plumbing. It's an apprentice gig. You don't go to school for it. You go to school for accounting, and then you start to really learn what the real world is like. And it's just a game of being an elephant. You just memorize things and apply things and try to think strategically on how to reduce it. And that's really my job. Is people call me and go, Jonathan, I need to reduce what I'm paying to Uncle Sam. And I've often said, well, hopefully you want to do it legally, because I'm allergic to handcuffs. And they go, yep, no, that's the plan. And then we're off and running. And that's a big piece of today's presentation, is a very legal way to not only help you out with some of the California issues that are in play right now, but also just reducing taxes. And some of the presentation that I will show you, I did create this. This is on our website, by the way. Very simple. If you ever want to watch it again, with my commentary. I'm going to skip my commentary section, but there is audio in this because we do present this as a webinar on our website, wellstax.com, and you can take a peek anytime if you want to just kind of revisit this and kind of understand the game. But let's dive in. Let's do it. So the first little bit, and I'm going to bounce around a little bit on this PowerPoint presentation, but this is an important feature because it's a little bit of the history, and a lot of people get mixed up with like entity selection, because before we can actually talk about this whole self-employment game, we really need to understand entity selection, like the concept of what it is. And so the gist of the entity Venn diagram that you have there is to represent the old high school Venn diagram, right? Every federal entity there in the dark blue or the purple is also considered, some form of a state entity. But the state entity is not always a federal entity, and that's really important because so many people come in and they'll go, Jonathan, my neighbor tells me I need to become an incorporation. I need to be an S corp. I need to do this LLC thing. I need to do this LP thing. I hear all sorts of stuff. And the most important thing to understand is that the federal government, when we're dealing with like the IRS, they're only concerned about a very small amount of actual type of entities. So let's talk about it. From a federal standpoint, what are we? We're individuals, right? That's an entity type, individuals. That's what we all are. We have partnerships. That's when two individuals, i.e. sole proprietors, come together to work together. They form a partnership. That's an entity choice. We've got our C corporations. That's our Apples, our Googles, our anything that's publicly traded tends to be a C corp. Not always, there are partnerships there too, but most of them are C corporations. Then we have our S corporation, and then we have typically our trusts, right? And our trusts carry an entity as well. And so that's our federal, but you notice it's not a very long list. But then you go to the state, and specifically if you're in California or Minnesota, you go to the Secretary of State's office and they'll go, oh, you want to form a company? Okay, we got about 47 to pick from. Which kind did you want? Right. And so what the key to understand is that the state entities were determined by attorneys and lawyers, and everybody was afraid of suing everybody. So they come up with a new thing and it would go into the state legislature and it would hit that level. But the federal government never said, well, that's one for us. They were consistent, right? Sole proprietor, partner, C corp, S corp. And so when we get an entity, just understand that we will have the ability to choose the way we want to be at the federal side. And so that's the important piece, before we kind of go into this, is that can I be a corporate entity, but be an LLC? The answer is yes. Because in fact, when we go get an LLC, which is what 95% of most people do now because of just the legal side of the LLC, they'll actually tell the IRS, okay, I'm an LLC. I want to be taxed like a partnership. Okay, I'm an LLC. I want to be taxed like a C corporation. Okay, I'm an LLC. I want to be taxed like an S corporation. The federal government gives us the ability to do it. Slick. It's great. It's awesome. Right. And so that's the most important thing to understand is don't think that one type of entity is locked into stone. The feds give us a lot of flexibility, and then the states also would follow suit, right? So I have many LLCs that walk in the door that are ultimately end up being S corporations. And then even at the state level, they become S corporations. Legally, they're still an LLC. They're never a comma Inc. Because they formed an LLC at the legal entity level. So that's kind of the first little bit of this, is just to understand the game that comes along with it. And so often when we do look at the federal, so I'm going to focus in on the federal. That's the whole point of that beginning part, is I don't really care about all of this LLC mumbo jumbo because I have the ability to do any one of these three, right? And so when we do look at the entities that you can choose from a self-employment standpoint, we have the sole proprietor. The sole proprietor is probably the most commonly used because it's the easiest to set up and it's the easiest for people to understand. It's the easiest for us to file taxes. It's just flat out easy. But remember, with ease comes also taxes. The government is very motivated for their own pocketbook, right? They want to make ease actually become more expensive. And you find that in so many different parts of the tax code. As I realized, like, gee, why do they only let us put $6,000 into a Roth IRA, but they'll let us put 22,000 into a 401k? It's because they get to tax the 401k and its growth later, right? They don't on the Roth. So they're going to limit us. They're going to push us and motivate us to go to the things that are best in their interest. That's another example of a similar kind of thing with being a sole proprietor. But ultimately, taxes when you're self-employed are built upon profitability. What do I mean by profitability? Everyone's familiar with making money and earning income, but you also have expenses. Profitability is just an accountant's way of saying, take your revenue minus your expenses, that's your profit. We understand that as a self-employed person, we pay taxes on profit. We don't pay taxes on our gross income like we do when we're W-2'd. That's a problem being W-2'd. We don't get our write-offs prior to calculation of taxation. And that's why we like to say self-employed, and we want to be able to play the games to do it. But being self-employed and paying taxes on net, it's important to understand that if I'm a sole proprietor and my con there, my big con is the highest tax rates, my tax is only on net. So I get people that walk in the door many times to me and they go, Jonathan, my neighbor says I need to be an S Corp. And I'll go, settle down, right? Let's crawl before we walk and walk before we run. Talk to me about profitability. And they go, well, I just started. I don't have any profit. Well, if that's the case, why do we want to have administrative costs to run this thing? So we typically will stay as a sole proprietor. We stay as a sole proprietor until we actually have profitability where the tax actually kind of hurts. So there's nothing wrong with a sole proprietor. It's easy. And I absolutely love sole proprietors. I prefer other entities when I'm making money, but if I'm not making money yet and I'm just starting up, it's a great place to start. So that's also a thing I want you to think about is spend money when you make money is a big theme to me. I don't like to get all crazy with a bunch of legal work and basically move down the path unless it makes sense. Now there could be, like I see a comment, California hates sole props, and that's probably very true for a lot of states. And it's just because there are unfortunately a lot of people that push the envelope on the whole employee versus employer contractor relationship. And sole proprietors are so easy to set up. And so people will push the envelope and go, I'll just go set up this sole proprietor and I'll give you a 1099. Even though you show up for work at 8 o'clock and I give you a 30-minute lunch and I tell you everything that you need to do. Right. So there's that type of piece that comes into play. But ultimately, now we look at those other two entities on the screen, C Corp, S Corp. C Corporation, I like to put this on there so people understand how does it work for the Googles, the Apples, the Microsofts of the world. As C Corporations, the biggest pro for them is the business continuity, right? When the CEO that founded it, if Gates leaves Microsoft, Microsoft continues with Sangella. So it's that business continuity happens. I guess there's continuity in all entities, but it's just more continuous. It's easier to do in a C Corp. The biggest problem with the C Corp, and the reason why I have probably 2% C Corp work in my firm is because from a small business is what I focus in on. C corporations are just not a really smart thing because of the con of double taxation. It actually has a higher tax rate net than a sole proprietor because it gets taxed twice. The idea on a C Corp is the entity itself pays its own taxes. But then again, once that entity's paid its taxes, then the individual owner would then thus pay taxes again on a dividend, right? The 1099 DIV, much like if you own dividend in an oil producing company, because they have big dividends, you pay tax, but the company's already actually paid tax. So that's that double taxation piece on it. But I do like this part, and this is the part I talk about from a C Corp standpoint. The day that they remove double taxation, or the day that dividends are not potentially taxed, if that ever happens, then I know my office, I'm going to be like Bob Sugar at Jerry Maguire and calling everybody going, it's time, right? When S Corp's gone, sole proprietor's gone, we're all going to C Corp. Why? Max tax rate at a C Corp's 21%. Very, very low. Max tax rate on an individual, 37%. So you can save 16% on very, very big numbers being C Corps. Again, double taxation still makes it net higher. But if we ever get a chance to be able to pull that money out without double, then we're all over it. But really the focus of today is to talk about that final column, the S Corporation. The part that I want to focus in here, look at the pros and cons of the S Corp and look at the pros and cons of the sole proprietor. They're inverted, right? The con on the sole is the pro of the S, and vice versa, for both sides. And so often I love the lower audit risk. Why is there a lower audit risk? Because it requires a special auditor, and there isn't as many of them that can actually properly do S corporations. IRS agents tend to be green, tend to be young, tend to focus on Schedule C's, sole proprietors. Once they got to kind of graduate a few years, and a lot of times they're gone, right? They don't want to work for the enemy forever. They want to go and do something a little different and give up the pension, of course. But the S corporation does require that level of expertise. The downside to an S corporation is that it just costs more. And it tend to cost a decent amount more to do it right. Anytime somebody's like, well, I got a guy that'll do it for this, I was like, well, have fun with that. Because to do it right, you got to have payroll. There's a separate tax returns, tends to be some level of accounting, things like that tend to be a little bit more difficult than a sole proprietor, but not crazy either, from that standpoint. But that's what I want you to kind of really think about is the pros and the cons. But again, we pay taxes on net. So this is a super important concept and a super important theme. Often people walk in my office and I tell them this and I go, got it. I understand. I pay less taxes, but I pay more administrative costs to accountants, attorneys, or whoever. At what point do I make the transition? This is probably the biggest takeaway for the whole day. At what point do I make that transition? And it's exactly this. If you're a numbers person, this makes complete sense. It's when the tax savings of making the transition over to an S corp exceed the increase in administrative costs. Simple math, right? And so, from there, that's the easy sauce. It's when our tax savings pays for it all, right? And most of my clients, once they understand that, they'll go, well, I'm not really paying you. Uncle Sam is from my savings. And I go, that's the point, right? And the nice part is administrative cost. Is it administrative cost? It's not a variable cost. I got clients that are S corps that make tens of millions of dollars a year. They pay the same amount to me that the ones that are making $100,000 a year. It's not like I do anything different if they got commas and zeros. The work is the work. So the savings go up as you make more, but it's not a direct linear approach to the administrative costs either. And I want to drive that functionality home too. So you understand that piece. Let me see if I can move this window. I can, good. All right, perfect example. This is not exactly accurate to the T in today's tax law. I built this about 3 years ago. This is an actual filer, real numbers, single filer, very simple, right? No house, no kid, none of this stuff, right? It was just very, very simple. Of course, if we have kids and mortgage interest and all the other bells and whistles, that's a reflection of federal and state income tax. Now, in my presentation, I'm using Minnesota because that's where I am. That's why I see 90% of people. But if you're in California, right, think of that around 10%, upwards to 13% based on income in California. Got a lot of clients over there. And so it just varies. If you're in New York, you might have a city tax and on top of that. Now, if you're in a state that's tax-free, if you're sitting in Florida, Tennessee, Nevada, there's a bunch. Congratulations, right? You get to miss that whole row going across here as a big fat zero. So that's lovely. But what we want to focus in on is this FICA tax. Self-employed people are familiar with FICA tax because often they hear the word self-employment tax. Self-employment tax, FICA tax, Social Security and Medicare tax, they're all synonymous for the exact same thing. It is the same word. It is the same percentage. It's just some people hear it differently just by the nature of the form. So when we have it come out of our check, right, they call it Social Security and Medicare when we're W-2'd. When we pay for it on our individual tax return, they call it SE tax because there's a form that says SE. But it is ultimately the same thing. It's 15.3%. It's both sides of the FICA tax angle. Employee pays half. Company pays half. Well, when I'm self-employed, I pay both sides. That's a downside to it, but it's based upon net. It's based upon the net income, not based upon the gross income. So biggest focus here, right, is expenses. Today's not a presentation about what expenses are. Maybe somebody has some questions at the end if we've got extra time. But the general gist is, what I'll tell everybody is save your receipts. That's the most important thing. Receipts are not credit card statements. Receipts are third-party documents from the vendor. Make sure you have those things in case of audits. Audits are going up, folks. Unfortunately, in the next 5 years, I expect to see exponential audit growth. Different presentation for a different day. But if I give you anything out of that, save your receipts. Okay. But for this purpose, net income 130. Now, what I want you to understand is when I see this net income of 87 approximately over here, it's the same thing. The only thing we're doing differently in this case is that we're issuing a W-2 to the officer for $40,000. That is considered a deduction for the purpose of income taxes. But the W-2 is going to go on the 1040 and you're going to pay tax on it anyway. So it's a moot point. It's just a formality thing. Profit is still 130 in both examples. Now, the biggest bang that we're seeing here is that reduction in the FICA tax. Right. And so we can see in this particular example, the S corporation is going to save approximately $10,000 in this environment. Now, fast forward, we're in 2023. I built this 3 years ago. What's changed in the tax law? There's a huge item that's changed in the tax law, and it is called this pass-through entity tax. It is a state level entity tax, meaning if you're in a tax-free state, go grab a cup of coffee. If you're in a taxable state like Minnesota, like a bunch of other states, they now have provisions strictly for what we call pass-through entities, i.e. S corporations and partnerships, not sole proprietors. What they do is they say, thank you for being a resident of our state. If you're willing to have your entity, your S corporation, pay us your state taxes directly, called pass-through entity tax, instead of you paying them personally, we're going to allow for you to include that state tax as a deduction up in your expenses against the calculation of federal tax. It's a complicated piece, but it is so beautiful. I have some people that are writing six-figure checks to the state in the form of PTE tax, and they're in 37% bracket on the Fed. You just take that state tax times their bracket. Congratulations. That's just a bonus for being an S corp. And that's a giant, giant number for a lot. That can make the savings so gosh darn big. I got clients that are S corporations saving 50, 60, 70, 80, 90,000 over sole proprietors, well in advance of any sort of administrative cost that's there. But this is a very simple example of how that potentially would work from a savings perspective of moving from one place over to the other. Now, what's it normally cost, right, to do it? If somebody walks into my office and says, Jonathan, you've done my tax return for years. I now started a small business. I got a food truck. And they're going to go, what's it going to cost me to do my annual tax work for this small business? And I'm going to say, well, as long as you got accurate books and records and I'm not doing accounting, a couple $100 in tax forms, it's not that big of a deal. That same person with the food truck says, I'm making a ton of money. It makes sense. I need to be an S corp. They're probably going to spend $3,500 to $4,000 now with regards to being an S corp. So why would I ever want to be 20 times my administrative cost? Well, it's when my tax savings, right? You see the number right here. That tax savings is well in advance or above the actual cost of doing it. We call that the no-brainer. Should be an S corporation overnight. If anybody on this call makes enough profitability as a sole proprietor and they're not an S corp, shame on the tax professional, right? Like that's their job to kind of go, there's another way, right? You're overpaying your FICA. Now, when you do pay FICA tax, you are qualifying yourself for Social Security and Medicare later in life. But for most people, specifically myself, I'm not looking to pay any more into the system. If we wanted to game Social Security and Medicare, we pay in for 10 quarters and then we never pay again, right? Then we qualify for Social Security and we're going to get 10 times back what we ever paid in. Problem is, it never works that way. We pay our whole lives and then we get a fraction back of what we've actually paid in because it's being paid out like a Ponzi scheme. Whether you like that commentary or not, it's kind of the way it is from a number standpoint. Where the working generation pays the next generation and so on and so forth. So yes, if I have somebody that walks in the door and they've never worked, and let's say they're 65 years old, I'm going to look at that FICA tax. I might maybe come over here and go, you know what? let's make this W-2 a little bit bigger. And we're going to talk about the W-2. I know there was a question on that, but let's make this W-2 bigger so we do pay some more FICA tax. So it does make you more eligible for Social Security and Medicare because you don't have a history of Social Security and Medicare paid in. But for 99 out of 100 people, we already all qualify. I'd go on a limb and bet that everybody on this call qualifies, for Social Security right now. Okay. So great savings, but must have reasonable comp. Right. This is one of the questions that came up is, well, what's that mean? What's that mean? Well, reasonable compensation. I've been through audits on it with the IRS. Typically, a reasonable comp audit is the number one fear for any S Corp owner. We are motivated to keep our W-2 wages low. We reduce our FICA tax and we maximize that PTE tax. I was telling you that state tax is maximized by the smaller amount of salary. So it is in our benefit to keep it small. However, because we're an officer of the corporation, the IRS determines that it must be a reasonable comp based upon what the services that we are providing. This is the story time, quick court case that I saw. It was a tax accountant. I loved it. I read it. As soon as it came across, I was like, this is me. I wish it was me. My numbers aren't as juicy as this guy, but this was a tax accountant that generated about $900,000 in profits. S corporation, not subject to Social Security and Medicare on $900,000. His reasonable comp that he paid himself was $65,000 for the year. IRS audits him, and I'm thinking, as soon as I see this, I go, oh, he's smoked. He's toast. Amazingly, this person was not. All they did is the IRS took him to the Social Security limit. The year that was like $115,000. And so he probably smiled and grabbed the checkbook as fast as he could because they took him to the Social Security limit. So he saved Medicare to all the way up, which is only 3% of the number, but still very, very good. Could have been very, very bad scenario. So 2 metrics that I learned from that court case is when we determine our reasonable comp, work with an accountant on it. Don't say that you make $5,000, but also don't go $120,000. It needs to be reasonable and commensurate upon what somebody in your industry would be making in a W-2, but also commensurate based upon the profitability in the business. It is a 2-legged street, meaning if I'm not making profits, I'm not borrowing money to my company to write reasonable comp. No, not going to do it. If I'm only making $100,000 and reasonable comp in my industry is $80,000, I'm not going to $80,000 either, right? I'm going to make sure that there's enough tax savings to warrant being the S corporation. So it will be commensurate to the amount of profitability that's there. However, there's one caveat. Unfortunately, surgeons, doctors, dentists that are self-employed, there's not a single one of them with a W-2 under $1.25, right? The chances that they're not, those individuals are pigeonholed. If they become an S Corp and they walk into my office, I say, I'm sorry, you're most likely at the Social Security limit right away. We're only going to save approximately 3% on the S Corp game because we're paying the Social Security portion all the way up. It is what it is, but for them, they make so much money that the 3% matters. And plus the PTE matters a ton. And so that was that other metric on there. And so that is the nature of how the reasonable comp piece works from that perspective. Other common arguments that I hear from an entity, and then we're going to open up to some Q&A. There's a couple questions coming in the chat box. But this is one I love. Well, when I'm a sole proprietor, I can put $55,000 into my retirement plan. And the answer to that is, yeah, you can. Right? If you have enough profitability and you pay enough FICA tax, you actually can put $55,000 into a SEP. That number is actually old. That's a few years old. It's higher now. But here's the part that I want you to really think about. Retirement contributions are based upon FICA taxable wages, meaning I have to pay 15.3% tax for the right to defer income into a retirement plan, right? If you understand that lingo, it's pay tax for the right to defer, not tax-free, but to defer to put money into an account that's going to grow. And then the IRS is going to tax me on it and its growth. But for that right of deferment, I got to pay a 15.3% tax. I'd rather just put my $55,000 into a savings and save my 15.3%, right? Like, let's do the math, folks. And deferred comp is taxed at ordinary income, where if I put 55 grand into a brokerage account, I only pay taxes on capital gains and interest, which is preferred taxation, right? Capital gains are better. So don't always think I need to do this because I need to max my retirement. There are other retirement plans in an S corporation that are beautiful. Solo 401k. I can defer 22,500 this year in a solo K, and I only have to pay myself enough to cover the 22.5. It's not a metric like a SEP plan is, where it's 20% of profits or some of that other stuff. So there are ways to still put a ton of money into retirement plans and avoid the level of FICA tax. My number 2 there is my favorite. I can pay for my personal expenses in a sole proprietor. Sure, you just can't deduct them, right? Like that's, people think that you can deduct personal expenses in a sole proprietor. No, you can't. Business expenses are deductible in both entities. The tax law is the same for all entities. Ordinary, necessary, and not excessive is a definition of a tax write-off for any industry. It's not like a laundry list that says pens are deductible and pencils are not. It's not that black and white. They want to be able to audit it. So there's no difference either. When I'm an S Corp versus a sole proprietor, what I deduct in one as an expense, and when I'm talking about expenses here, right, I'm talking about the numbers right here, right? This 20,000 in this example, that's what I'm talking about there. That's what I mean, right? It's the same for, for all entities that are carrying the board. And so just as a summary, right, remember the federal entity selection determines taxation, not the state entity. Unfortunately, you do have to get a state entity to have a federal entity, unless you go sole proprietor. Doesn't require a state entity. Understand the pros and cons to each, right? They're inverse, they're flip-flopped, right? Cost versus tax savings. And then understand that from an active income perspective, the S corporation does provide the most native, best taxation outcome that's there. And for you California folks, is going to make it a lot easier for you to get around all of the crazy hubbub that's going on around there. So at this point, basically going to, I'm going to take a look at the chat, right, and see if there's some questions that people have here. I
started taking some notes for you.
Yeah.
In the chat. And you guys can ask the questions yourself. Miles, I think you said an LLC is still considered a freelancer according to California's AB5 law, which is true. When I was getting audited for my independent contractors, they said LLCs are basically, they're not companies.
even if you elect S Corp status, huh?
No, maybe that's because is that new? Have you always been able to elect S Corp status as an LLC?
Yeah, pretty much my career. It's for a long time it's just not, if you run into a problem, again, there's no problem being a comma Inc. and electing, because you have to elect S Corp status no matter what. To get over to S Corp requires an election. There's no direct route to S Corp. It's always additional paperwork to get there. So you either open as an LLC, you open up as a C Corp, right? From there, the C Corp can make the election to be an S if they meet the requirements. And there are requirements, but every small business meets the requirements unless they have just massive number of partners, but then they're not a small business. But yeah, if you run into problems like that and they're just kind of discriminating against the LLC, which is what it sounds like, just go straight to an Inc. The only downside to going straight to an Inc. is legally, now I'm not an attorney, right? I'm supposed to spin around, put my hat on backwards and, jump through a hoop if I say these things, but you're supposed to have a board of directors then, right? You're supposed to have annual meetings and minutes. These are why people get LLCs, because they kind of bypass the legal side of the game. But so be it. Every year, go have dinner with your spouse and have your board meeting and just write down, this is our board meeting for the year, and put it in a folder somewhere. And I've never seen an IRS auditor come in and go, show me your board meeting minutes, right? Like, no, I've never seen that. But that's the theory craft of it. So if you do see that you're running into problems related to that, then go direct. It's no problem. So I saw something down here towards the end. Doesn't this also affect on Social Security payouts down the line, though? I did talk a bit about that, meaning that yes, it does, right? I guess the answer is yeah, sure, it does. But if I'm already qualifying for Social Security, and I don't have to pay into the system as much as I already have. And I can physically put that money into a plan for myself, like a 401k, because that's really what I'm talking about. The money is in your mind. I always tell my clients, think of the Social Security and Medicare money being spent covering some of the administrative cost, but then your savings, take your savings and put it in a Roth IRA, take your savings and put it into your 401k. You will make out like bandits in comparison to what if you just paid it into the SSA program. It's night and day. I mean, just do the math, and you'll see, how that works. But yes, if I, like, again, if I had a spouse, for example, like my wife stayed at home, raised the kids, at some point in our lives, I'm going to put her on payroll on my firm, which is an S corp. I'm going to pump it up. I'm going to put a ton into 401ks and things for her, but I'm going to get her to make sure she qualifies for Social Security and Medicare. But I won't analyze that until she's old enough where I really care. I'm not going to do it now. She's, 33, so it's not that big of a deal. But I will at some point. At that point, as an S corp, I noticed that my expenses for getting my taxes done annually are really expensive. Is that still a savings over being an LLC? That's the whole concept, right? If it costs me $4,000 to get all my work done versus $200, my savings need to exceed that 3,800. If it doesn't, and there's no other reasoning, obviously the whole California piece is yet another reasoning. You can find, I mean, if cost is a metric and I'm not saving a ton of money, it can come down. Like when I have people that are spending $4,000, it's turnkey. They're getting tax planning, their personal returns, a little bit of accounting in there. There's hand holding along the way in that price. But to get the taxes done for an S corp, we walk in my office, I'll say, you're going to spend $1,000 to do an S corp return. You walk into my office for a personal return, I'm going to say, you're going to spend $500. I don't know. I mean, it goes up, but that's just kind of off the cuff kind of things. And so we do it when the savings exceed those things. The tax savings must exceed it or we don't. I'm paying $5,000 a year just for the taxes. Accounting and bookkeeping are extra. New York or California? Right?
California.
Yeah. And
California.
I don't know. I have clients that are in this on this Diamante Road or something out in California, and I think it's the metric of where you are. $5,000 a year just for taxes is excessive in my world, specifically if there isn't a lot of states to go along. It could be. I mean, I've got taxes that are $20,000, but I'm filing in 31 different states, and it's a big business. Like it's a lot of work. It takes an army to get that thing done. But if it's just a single owner S corp working in one state, yeah, that's more than, I mean, we're considered middle market. I'm not top end. The McGladrys, the Whitfleys, the Lurie's are kind of the regional firms in my area. But if you're at one of the big four, plan on paying a lot, right? They're very expensive to get taxes done at places like KPMG. I interned there. It's ludicrous expensive because they just don't really want to do it. Let's be honest. They don't want that work. So they just charge it up. But yeah, you can find it. You can find
that brings up two questions. I'm going to, first one is, are you taking clients from California? I know Bridget.
Yeah. I got clients everywhere. So okay. Yes, worldwide.
So there you go, Bridget. That's a question. And then I'm going to open up this can of worms, Jonathan. These are 30 plus freelancers.
Yep.
And I live in California, but I'm constantly working in Orlando and I'm Dallas and in Salt Lake City and New York. Yep. But we only file my return as an S corp in California. When do you file another? Like, we don't have to worry about that, right?
When you go to other states. Now you want now, is anybody here on this call representative of any state Department of Revenue? And the answer is you're kind of in the entertainment industry. Like I used to do a ton. I was a big hockey player, so I did a lot of NHL hockey player taxes. I enjoyed it, working with agents and doing that stuff. They actually record. Like they get off the plane and they have like their steps in the state and they know exactly how it goes. And in theory, you're supposed to pay taxes to the state that you're physically working in. Now, if that is just transient kind of a work, like you got consultants, right? But the consultants will go there for a week and do a little work. Now, if we're talking New York City, you might give them a little love. New York is, they're tough. Right. They're tough because they're one of the in the state day by day metric states. There aren't too many states that are like that. In fact, it's the only one that comes to the head that they go, How many days in the state were you there? And then let's prorate your income based upon the days in state. Hello, right? That's
Told you
great.
the can of
But
worms.
let's be honest. If it's, if I'm making $5,000 here or there and I'm self-employed, ain't going to go through the work of doing all that. It's just,
Okay.
it's not reality. But if I'm bringing in 6 figures in a state, yeah, I'm probably going to go through the work.
Copy that. Okay.
Yeah, so you use materiality. Materiality matters because even from the auditor standpoint, understand every state you walk into, you're not actually on the radar. You don't have a state ID unless you have employees in that state. So they don't even know about you. And that's
Right.
the truth of the matter. The bigger issue is more sales tax related stuff in states than it is from an income standpoint. That's what they're really after, is the whole Wayfair versus South Dakota game. But that's a whole conversation for another day. And most everybody here is probably not having to charge sales tax, right? There's service businesses. So, okay. There was a question, is 150K the example of the turning point? And the answer is no, it isn't. The turning point, typically, like in Minnesota, my turning point's 50 grand profit, 50,000 profit. It can go that low. Why? It's because of the pass-through entity tax that the states offer. When I start throwing that on top of the FICA tax savings, it can grows very, very quickly in a state that you've got a PTE availability. Most of the time prior to PTE, I used 80 grand as my number. Typically at an 80 grand profitability, I would W-2 30, and then I'd go FICA free on the other 50. And so that's a $7,500 savings. Then we kind of cut back on some of it. Those tend to be a little bit easier, so we don't have near the accounting / bookkeeping work that needs to be done. So you can bring those costs down in line. So there's always savings. We always want to maintain savings for our S Corp. I never want to go home at night, to do that. And so that's the skinny on that. Let's see, other questions. Let's see what else we got.
I had one come in offline. Is adding a spouse to an LLC a good idea? What are the pros and cons? And
So remember that LLC is the state entity, right? When it comes to
Right.
filing taxes, we only care about the federal entity. So when we go get an LLC, it is by default a sole proprietor, default, right? So the IRS has to give us defaults based upon a state entity. They kind of have to go, well, we can't do check the box elections on everything. We have to default certain things. So when you go to the IRS and you get your EIN number and you say, I'm Jonathan Wells LLC, they're going to ask me on like the second page, how many members are in this thing? And if you say 1, automatically it defaults internally in their system that I'm a sole proprietor filing a Schedule C. If I say 2, automatically defaults to a partnership filing a 1065 tax return, separate tax return, additional administrative costs. Do I put my spouse on an LLC? Heck no, if I'm a sole proprietor. Because all of a sudden, what I've done is I've created now a multi-member partnership. You've just jumped the administrative cost significantly with no savings. I see that error happen all the time, especially.
They're both freelancers
Yeah.
in the biz. I see. Okay, good.
But under an S Corp, put them together as one S Corp, brilliant, right? Save the
Yes.
money, economy of scale, put it
Get
all
some
together.
401ks going.
Yeah, it's great. Yeah, it's great. Yeah. Let's see, new messages. Better to wait. Is it better to wait for the turn of the year, the fiscal year? Great question. So here's kind of the sneaky sauce to S corporations. We can backdate with an automatic approval from the IRS 75 days. So as we sit here right now, we can backdate to approximately March 1st. Yeah, March 1st. As we sit here today, I could backdate an S corporation to March 1st automatically. However, there's a rev proc. I use this all the time. I get people that walk in the door with Schedule Cs in August. They made a bunch of money, and I just start to go, oh no, they're not going to like this outcome, right? The FICA tax is going to chew them up, or the SE tax. And I tell them that we can go down the S corp rate, and I can backdate it all the way to January 1st. The IRS has a revenue procedure in place that as long as we follow the revenue procedure, the purpose of a rev proc, they call them rev procs, revenue procedures. The purpose of a rev proc is to guarantee admittance to something just because I didn't hit the time, right? Because they know US taxpayers are procrastinators in nature, and they know that we potentially will get to June and it'll be like, oh, bummer, I forgot to send that thing in by March 15th. Well, if it's money, congrats, penalty and interest. But if it's just a tax form, many times there are ways to be able to still legitimately do it and backdate it. I backdate them all the time. Now, what I won't do is people that come in January of the following year, I will not backdate those. Even though I could never get the payroll done. We're past payroll time. So remember, I have to have enough time to get the payroll done. My latest I've done is like December 2nd. And I kind of got a little nervous on the December 2nd because they do sign penalties of perjury that says they intended to be an S corp all the way back. Well, are they truthful? I don't know. They sign it, not me. But that's the game, right? So you can do some backdating there from that. Can you still use the PTE if we do LLC taxed as an S corp, or does it need to be an S corp from the get-go? No, PTE tends to be any sort of pass-through entity. As long as the state knows that you're an S corp, that pass-through entity tax will be solid as well from that. So it's a very, very good, it's an election, folks. So keep in mind that by default, there are tax accountants out there I run into that didn't do PTE. And I kind of go, gosh, but PTE is for most people is due by March 15th, not April 15th. So it's a month earlier. Most people think about paying taxes April 15th. S corporations are due March 15th, a month early, because they want K1s to get in people's hands with enough time to do their personal returns. But that PTE money is due early, and so many people forget about that, and they get hit with PTE penalties, which is still okay because it's still worthwhile, but nobody likes a penalty. It's my understanding that the switch from sole proprietor to S corp should happen cleanly at the end of a quarter, like June 30th. Nah, don't matter. Get backdate it, right? And so that's the concept from that. Let's see. Any other?
Guys can unmute
Yeah.
this conversation.
Hi,
Yeah.
it's Anne. That's me asking a bunch of those recent questions.
Yeah.
So about the backdating, most of us on this call, I would assume, have, like a dozen or so entities that have already issued us payments this year.
Yep.
Under the sole proprietor EIN. So
Yep.
switching to the S corp, it's going to switch EIN numbers, correct?
Well, no, it doesn't. Not necessarily. So let's say if you have an EIN that you just registered as a DBA, right? So let's say you went to the Secretary of State and you just said, I'm just going to be Ann's Consulting, and I just want to work under the name Ann's Consulting. And you went to the IRS and you said, IRS, I'm a sole proprietor. I just want to get an EIN because I just don't want to give my social security number to everybody. And
which is where this started. Exactly.
Please.
And that's very, very normal. If that's the case, unfortunately, you will have to get a new EIN because you didn't get an entity. You just shielded your social security number. But now if you did, and you said, I got Ann's Consulting, LLC, and you are still considered a sole proprietor and you have an EIN for that LLC, now we check the box and just tell the feds that this EIN is now going to file taxes as if they were an S corp. Everything stays the same. Brilliant. Banking stays the same. EIN stays the same. We love it. The 1099s come in and the right EIN. We don't have to do it. Now, if that's not the case, it's still not a deal killer. And here's the reason why. Many people that are in the financial services industry or the real estate industry, who carries the license? The individuals do, not the entity. So like broker dealers, for example, I do have a Series 7 and a Series 63, and my license is held through Ameriprise Financial. Ameriprise will not pay my S corporation. No matter what, they will not give $1. They do not want the EIN of my S corp. They issue my 1099 in my personal name. You know what I do on my taxes every year? I file out a Schedule C, I record the full gross amount, and then I write down below it in cost of goods, paid directly to EIN number, S corporation, deduction. And my net is zero. What's my tax on net? Zero, right? And then I make sure that money is moved into my S corp. It's got to be legit. Got to move that money into my S corp. Now my S corp has it. So in industries that are strategically more difficult to make it happen, the IRS doesn't care. Now, you might have people like RESPA and NASD and some of these other industries that do, because like I said, Ameriprise won't do it. There are other broker and dealers that will. Why will one do it and why will one not? It's all based on who got sued, right? That's all they're just determining based on legal. But the IRS doesn't care. As long as I follow the form and do things properly, it's totally fine. Now, in the future, in the following year, We don't want that problem to be consistent. So we'll give them a new W-9 and say, please pay us in this LLC's name and this new EIN number, please. But if we do the backdating and we've had a few payments in that personal period, a lot of the small businesses will let you update the EIN number all the way to the end of the year and include every payment. So
that would be your suggestion. If switching right now from an entity sole proprietor, not a sole proprietor that had an LLC, if switching now, then I need to go back and ask all the companies that have paid me already to switch the number they're paying to.
correct.
Presuming I get a new number.
And a lot of them will. The bigger ones, the bigger companies, if you had bigger publicly traded companies or anybody paying you, that's a bigger company. It's a lot more, logistics, kind of a logistic nightmare for them because they're just behemoths. But smaller businesses typically have no problem because all they do is update the Rolodex. 1099s aren't done yet, right? The forms aren't even out to do 1099s for another 5 months.
Right.
So for
Yeah,
most
I just
people,
got one today. Someone said I need to change. It's easy. Someone needs to change who I pay in my 1099 this year.
Did you find that annoying, Nancy?
No.
Okay.
It's like when someone moves, they send me a new address. I'm going to send the 1099, right?
Okay. Yeah,
But
that's
I'm
one of the
not
main things
behemoth.
yeah, exactly. Don't want to be annoying to those who have already paid me.
There's people that do it.
Yep.
I don't think anybody's too behemoth in our group. Any of our agencies are still, the GPJs and August Jacksons, there's someone will do it.
we have a PSA announcement.
Oh, yeah. Hi. So I became an LLC 3 years ago, and probably 6 months afterwards, I realized I should have just paid the bucks and gone with a C. Partly because in California, as you've already pointed out, you're an individual, and that gets into all the weirdness of AB5, and you should be on staff with the company and taxes taken out and all that. However, what I have found, if there's any good in any of this, being an LLC, most agencies that hire me are totally clueless about what that means. And in their minds, it's the same as being incorporated. So I thought, well, what the hell? I don't want to spend any more money. I'm already paying the state of California $800 a year just for the right to be an LLC. I'm not going to spend any more money. And I've never really had an issue. As a matter of fact, I just did a show a month ago for a company, and I said, actually last year, and I said, I've never gotten a 1099 from you for 2022. And they said, oh, no, you're an LLC. We would never give an LLC a 1099. I said, you are so right. I apologize. I must be thinking about somebody else. And that's it.
Yeah. No, if they knew the rules on 1099s, they ultimately wouldn't. But again, they haven't seen my Venn diagram, right? Like they don't know that it's just a state entity, has nothing to do. Federal entities determine everything. And so if you actually look at the W-9 form, the new W-9, it actually has a nice line in there, and it says limited liability company. What type are you at the end of it, right? They want you to put an E or an S or a C because that's the determining factor for 1099 purposes. But you're right, most people don't know. It's very common. I see that all the time with LLCs. You're an LLC, you don't get it. I was like, well, what if I'm a sole proprietor? Yeah, I do. There's nothing wrong with that. So
my problem with getting LLC with a former business in California, because it is $800 a year, is that extreme cost. Like we were already like a tiny business filing at a massive loss in all regards, but it's not taxed, it's just a fee. So that $800 a year was just like coming out of our car fund, like, it had to come from somewhere. Do you have advice on like how to select where to station your entity? Is that like a whole other can of worms in itself? Like I have friends who started in a different state, moved with their spouse, and just left their entity in the previous state. Like how intense is that whole conversation?
So remember, where we live always gets the money, right? Doesn't matter where we incorporate. So often people will say, file your paperwork in Nevada, file your paperwork in Delaware, right? Like we've all heard Delaware. Why Delaware? Because you can hide everything in Delaware, and it's a very good legal structure if you get sued for, basically fiduciary responsibility lawsuits. They love it to get sued in Delaware because the courts are very pro-business. Nevada is the same way. That's why they do it. But if I'm sitting in, in a tax-free state and I file out of Delaware, I'm going to have to file wherever I live, wherever I'm doing work. So again, where you incorporate doesn't matter. The only problem is if I do incorporate, let's say in Delaware, and I'm physically living in California, California has a rule that says you must file what's called a foreign registration to do business in our state, right? So if an outside company can't just come walking into a state and not register themselves. So they do what's called a foreign registration with a yet another fee. It's not an annual fee, it's a one-time fee. But you're right, the California $800 thing, I often think that it's all, like it goes hand in hand with what they've been doing under that whole Uber case, right? I feel like there's a little bit of
And our
money.
gas prices.
Yeah, right. Like it's just, I get me started on how many clients I have that are paying $800 and they don't even make $800, right? They just have the one employee working out of their house out there and they're just bang stuck. Because California is very, very good at finding reasons to get that $800 fee. But it is what it is, right? I mean, you can't really get
Yeah,
around.
because it's nice and warm here, liars.
Oh, yeah.
Girl in the sweater.
Oh
Hey,
God.
we are gonna have to wrap this up because it's almost top of the hour. Jonathan, can these folks write down? I mean, they have your phone number and all that. I put it on our email. I'm gonna this is being recorded. I'm gonna send it out to all those that missed it. You may get bombarded, Jonathan. You cool with that? We're good.
Yeah, that's fine. I've got wonderful filters. Even like my email that's projected isn't really my email. It's kind of lovely. It goes through like the staff funnels and they protect me because they know they're like, Papa Bear has 3 babies at home, 3, 2, 1. We don't need to give him a heart attack.
Right.
And
Okay,
so
good.
it's, yeah, no, it's totally fine.
This was
Awesome.
so stinking helpful, so informative. Thank you, Jonathan. Barry is giving the clap.
You're very
And it means the world to Tempo too, y'all, because I am in California, and though I've been cleared by 2 amazing, fantastic, wonderful attorneys that said I have the best business in the world, well, you guys are legitimately gig workers. I'm still getting, the agencies are still bugging me for hiring freelancers. So if you can prove to me that you are a business and you can prove that you have liability insurance, Hadley Wood, open your camera if you want to. It's not a big deal. Getting insurance is not a big deal. It's not super expensive. You all are really good at what you do and you make enough money. You need to protect yourself. And it looks really good when I go down my list of whoever applied for a show and I'm like, oh yeah, I do have a COI on file for that person. Oh, this is a true business entity, because I'm getting pushback right now from an audit I'm going through, and they want to see all of your insurance policies and they want to see your business entities so that you really are businesses. So do it. Just do it. You look better for me. You look better for the California, and I am in California. So anyway, next week, insurance. Hadley is here somewhere.
Hello,
There she is.
everybody. Hi, everyone. I'm excited to be talking with you next week. So we'll go over everything you need to know about liability insurance, workers' comp if you need it, professional liability. All your questions will be answered. So it'll be fun. We'll make it fun.
Yay. All right, team. It's 2
Thanks,
o'clock.
everybody.
Thank you for showing up, and I hope I can see you guys on the Slack